Hi, this is Dave Beckman with Ascend Home Loans, your Denver mortgage guy. And did you know that there's never been a better time to purchase a home? And I'm going to show you why. Rates go up, prices go down. Rates go down, prices go up. How do you know when is a good time to sign that purchase agreement and buy that home? Well, logic and data suggest that right now could be the best time in history to buy. If you look at the Housing Affordable Index, this tells you that it's never been better. Now, if you look at between 1980 and 1990, that was another good time to purchase a home because the affordability index was great. During the 90s and into 2000, as you can see here, it was relatively flat. And then prices started going up during this period. And then, as you can see, during the recession, the affordability index is going up and up and up, which is a good sign for you if you're looking to purchase a home. The employment picture is improving as well. If you look at during '08 into '09, we're starting to see a rise in employment, and now we're back into the positive zone in 2010. So it looks like the employment picture is improving, which means things are going to change as far as prices going up and possibly rates going up as well. The government has given us this QE2 stimulus that's going to go away this summer, and we all expect rates to rise at that time. Now, if you look at the sale of existing homes versus the pending home sales index, during this time, it's continually gone down, 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 and then it rose. There was a valley, there was a valley here and then a peak here, and then it's gone down in 2010, risen up again, and then we had during the summer into the fall of 2010 a decrease. So now we're back on the rise again. And then what happens if there's a mortgage rate increase? Rates have been relatively low for quite a long time, and all is anticipated that they're going to start rising. Here you see what on a $200,000 home, with a 20% down payment, the principal and interest payment is $990 at 4%. But if you look at 6%, it's roughly about $200 a month more. And then if you go into a higher priced home, you can see how it increases over those times. Now here's the California First Time Home Buyer Housing Affordability Index. And if you look at 2007 in the second quarter, the index was at 26. But look how high the median price was. It was $506,000. Again, these are California prices. And the payment was $3,100 a month with an interest rate of about 5.64%. Now, if you look at the first quarter of 2009, the index is at 69%, but the housing median price is $210,500. So as you can see, the housing price is about half of what it was in 2007. And obviously the payment's lower and the income to qualify is considerably lower at that interest rate of roughly about 5%. Now let's look at the fourth quarter of 2010. The index is roughly about the same as it was in '09, but now you can see the median price is starting to rise, and the principal and interest payment is rising as well, as is the minimum qualifying income. Here's an article from February 17th, and basically what it says is the highlighted portion says today's report shows that housing affordability at the end of 2010 was at its highest level since we started computing the HOI. That's a great sign for a new home buyer. Now let's look at some stats. In 2005, the Housing Opportunity Index was at 41%, and the median price was $254,000, and the fixed rate was 6%. And look at how many fixed rates and how many ARMs we were doing back then. Now there's not as many ARMs as there were back then. Now in 2010, the Housing Opportunity Index is at 73.9%. The national median price is $175,000. Interest rate about 4.5%. So as you can see, now is a great time to purchase. The last time that a house cost $176,000 with a rate in the fives was about 2003. Look how much the price rose and the interest rate rose in 2007. So there was a very big increase, I'm sorry, from 2003 to 2004. From 176,000 up to 219,000, and the interest rate went up as well. Now here's something on appreciation of your home. This kind of surprised me when I saw it, because everybody thinks that houses aren't appreciating as much. But if you look at what the average was between 1940 to 2007, the average increase was 5.45%. That's an annual increase or appreciation on your home. Over the past 100 years, from 2007 to 1907 to 2007, that has gone up 3.78%. And then you can see here's what's happened during different periods. This is what first-time home buyers should buy now. As you can see, if you're renting with an average rent charge of $2,500 a month, you've got taxes, insurance, and other things of $105, which puts your net monthly payment of about $2,605 per month. Now, in the current environment, if you purchase today, this is what you could do. You could basically save roughly about $700 a month. But if you wait for the price to drop, the rate may go up, which isn't going to save you a whole lot of money. And then if you look at the bottom falls out and rates hit an average 20-year high, that's going to go up as well. So what you're seeing here is that, as you can see, the rent versus principal paid in 5 years, nothing here if you're renting, but in this scenario, if you buy today, you'd save $43,349, which is the highest you'd save on any of these scenarios. Now, what about a move-up buyer? Let's look at what happens if they buy today at 4.25%. The savings in 5 years would be $21,000. If they waited for prices to drop and the rates may go up, you're only going to save about $10,000. So it really makes sense if you look at this graph. Buy now, current rate, current price. Over 5 years, you're going to save $21,813. If you wait for the price to drop, and if rates go up in a year, your savings is considerably less. Well, thanks for watching this video. I hope I pointed out some important reasons why now is a great time to buy a home. If you have any questions or you want to get a pre-qualification, you can call me at 720-255-0955, or you can go to my website at www.yourdenvermortgageguy.net. Again, I appreciate you watching, and make a good decision on buying that home today.